Hello, everybody. Roaring Kitty is back. The myth, the cat, the legend. Actually, not the cat, Keith Gill. His tweets have been blowing up over the last month. And so today, we're going to delve into the world of Roaring Kitty, what's going on today, what's been going on the last month. We're going to even take a deeper dive into what happened in 2021, what these short squeezes are, and why hedge funds had such a painful experience during that time. Let's set the stage with a bit of a backstory. Roaring Kitty, also known as Keith Gill, emerged into the financial arena in 2020, 2021 because of his resolute stance on GameStop stock. His online presence, particularly on Reddit and YouTube under the pseudonym Deep Effing Value, garnered significant attention for his bullish stance on the gaming retailer shares. This led to incredible success for small retail investors and sparked the hilarious movie Dumb Money, starring Paul Dano as the man himself. But remember, as legendary investor Peter Lynch once said, dumb money is only dumb money when it's listening to the smart money. And Roaring Kitty took that to heart. This meme stock craze led to some incredible success for retail investors, but also led to extreme pain and losses for the hedge fund industry and a lot of the folks that go short these companies. This also led to quite an entertaining interview where Roaring Kitty spoke with Congress members and shared his story to the world. Fast forward to today, and Keith Gill is in the spotlight once again. It all started on May 12th, 2024, when he posted a cryptic message on X showing an image of someone leaning forward in a chair. The seemingly innocuous post caused a dramatic reaction in the stock market, propelling GameStop stock from $14 to $48. Despite the post not mentioning GameStop explicitly, the implication was clear to his followers in the wider investment community. Roaring Kitty was making moves again. GameStop took advantage of this opportunity and actually raised $900 million of additional stock at $20 a share to capitalize on Roaring Kitty's comeback. In addition, Roaring Kitty took a $260 million position in GameStop options through E-Trade, and this has not gone unnoticed. And so just yesterday on June 6, 2024, the man himself live streamed on YouTube to thousands of folks watching, and now we've already seen over 2 million people have watched the video. You can imagine a number of hedge fund analysts, SEC members, you would think, and maybe even the Fed are tuning in to see what he has to say and how he might be impacting the markets. Get this, during the day, GameStop plummeted 40%, and the New York Stock Exchange actually halted trading on GameStop 12 times throughout the day. Despite the massive drop yesterday, shares of GameStop are still up over 90% since his original post back in May. And so during his live stream, Roaring Kitty showed us his current portfolio. And as you can imagine, it was quite diversified. And his first position is 5 million shares in GameStop with a cost basis of $21 or a current gain of 50%. That gives you a market value of $160 million. And his other position, yes, you guessed it, was 120,000 call options of GME with a market value of around $160 million. It's currently up 135% with a total portfolio value of $350 million. So those folks who preach about diversification of a portfolio, they're clearly pulling their hair out as, this is quite a concentrated bet, but what else would you expect from Roaring Kitty? And as you can imagine now, the Massachusetts Securities Division is looking into Gill's activities. Additionally, the SEC is looking at his call option trades around the time of Gill's post to see if there was any sort of market manipulation or a violation of trading regulations. Gill, who portrays himself as a deep value investor, has gained a huge following, obviously. And so his ability to move markets with a single post underscores the tension between the traditional financial institutions and the online retail investors who use social media to share investment strategies. Furthermore, there are rumors that E-Trade is considering limiting his account due to the potential risks associated with his high-profile trades. This potential move has sparked a debate around the fairness and transparency of trading platforms in handling influential retail investors. His recent activities have proven that his influence over the retail investors is incredibly strong, and his ability to mobilize retail investors is as strong as it's ever been. To truly understand Roaring Kitty's impact on the financial markets, let's take a look back in 2021 to see what happened with the hedge funds, what happened with these short squeezes, what are they? So let's go ahead and explore that right now. A lot of folks will even mention that back in 2020, Stonks Flying Up posted a humorous video in October explaining how a short position by Melvin Capital could be used to execute a short squeeze using a scene from Chernobyl to illustrate how the hedge fund would blow up similarly to a nuclear reactor. This was quite foretelling, as Melvin Capital was one of those hedge funds who was significantly impacted by the meme stock craze. So those who might not be familiar, we'll just go over what is a short position and how did it contribute to such turmoil for these hedge funds. A short position is when an investor borrows stock, sells it in the market at a certain price with the hopes that the value of that stock will go down, and so they can later buy it in the market at a lower price and pocket the difference. So for example, if GameStop is selling at $10, the short seller thinks it's a $5 stock, so they'll borrow a stock at 10, sell it in the market, and then ultimately buy it back at say $5, pocketing that difference. Now, a short strategy, while potentially profitable, carries significantly more risk than going long a stock, because if the price goes up in value, you have to buy back the stock at a higher price. And in terms of the value of the stock, it can continue to go up and up and up, and so your losses are pretty much limitless, versus if you're going long a stock and it's $10, the most you can lose is $10. Or if that stock goes to 100 and you have to buy back that stock at 100, you're now losing $90. So in January 2021, GameStop stock was so heavily shorted that 140% of its public float was actually short. The situation was unusual and extremely risky for short sellers. Enter Roaring Kitty and the WallStreetBets retail investors who recognized this vulnerability. By buying up GameStop shares en masse, they drove up the price, forcing short sellers to buy back shares at higher prices to cover their shorts. This buying activity further drove up the stock price, creating a feedback loop known as a short squeeze. And GameStop wasn't an isolated case. Come AMC, BlackBerry, and others that all went up 100, 200, 300, 400, 800% in the course of a month as hedge fund managers scrambled to cover their short positions in these names where they didn't see the fundamental value. And so these dramatic price movements highlighted the widespread influence of retail investors and the power of online communications. In the aftermath of the short squeeze, regulatory bodies scrambled to address the implications of these events. Calls for financial transaction taxes and increased market oversight gained traction, reflecting growing concerns about market manipulation and speculative trading practices. Hedge funds, meanwhile, revamped their risk management strategies to mitigate exposure to volatile meme stocks. So part of my job is I actually speak with hedge fund managers, money managers, and so as you can imagine, there's some scar tissue built up from the pains of 2021. The game has changed for hedge fund managers. They're adapting to the changing retail landscape as well. And so it'll be interesting to see what happens next. With the reemergence of Roaring Kitty, it serves as a reminder for the power of individual investors in today's digital age. If you found any of this interesting, educational, entertaining, feel free to like and subscribe. Leave a comment, let me know your thoughts. Are you investing in GameStop? Were you a part of the meme craze in 2021? What are you doing today? So with that said, we will continue to post videos on personal finance, investing, and business. So we hope to see you next time. Take care.